Hey everyone, welcome back. This is Module 2. This is Tricks with Wicks and Candlesticks. In this module, I want to help you understand that the wicks on the candlesticks can help you recognize potential price action reversal, okay? This must only be implemented with a confirmed trend. And a confirmed trend, as we all know, must have 3 confirmed points of going up or down, okay? So if you have 3 confirmed points of an uptrend, okay, you can use these, or if you have 3 confirmed points of a downtrend, these will be helpful. So make sure you draw your trend lines. If you're not certain how to do that, go back and review trend trading or drawing trend lines, okay? There are thousands of candlestick patterns, although there are only a few that allow us to take specific trades and be in profit every day. Candlesticks and wick patterns indicate reversals in the markets, okay? This is what we're looking for, is reversals in the markets. This is the hammerhead. This candlestick is known as the hammerhead. When looking at a prolonged downtrend, okay, so you want to make sure you have a downtrend going, a hammerhead will indicate a reversal in the market and that the market is headed or potentially headed for an uptrend, okay? The longer the shadow, okay, the longer the shadow, the more powerful it is, okay? So the wick must be, this is the wick, must be at least 2 times the size of the body, okay, this is the body, to be considered a hammerhead, okay? Sometimes I'm a hammerhead. I was a hammerhead when I first started learning this stuff, okay? But like I said before, you can learn this. It's not difficult. Just study it, practice it, look for it in your charts, and watch the different patterns that are going on there. I mean, I could take you over to Thinkorswim and show you some of these, but I'd have to scroll through, you know, a lot of time charts and to show you this. But as I'm explaining it, just go open up your Thinkorswim charts and look for some, and notice when you have a prolonged downtrend, when the hammerhead shows up, it's going to indicate a potential reversal in the market and that the market is headed for an uptrend, okay? Just make sure that you're looking at a candlestick this size, okay? Okay. The shooting star or the inverted hammer, okay? If you see a shooting star after a prolonged uptrend, be ready to sell or take a put trade. And how I remember this is that when we look at the sky and we see a shooting star, we know it's falling, okay? So that's the end of an uptrend, so things are starting to come down, falling, so we take a put trade. Make sense? Good. If you see an inverted hammerhead after a prolonged downtrend, okay, inverted hammerhead after a prolonged downtrend, be ready to buy or take a call trade, okay? So shooting star or inverted hammer, again, 2 times the size of the body. It's just a total opposite of what we saw in the prior slide, okay? So uptrend, take a put. Downtrend, be ready to take a call. Simple as that. The hanging man mainly occurs at the top of uptrends and is a warning of a potential reversal, and a downtrend is potentially about to occur, okay? The hanging man is basically the opposite or the bearish version of the hammerhead, okay? So you have the body, the long wick down here in the body, of course. Remember, 2 times, at least 2 times the size of the body, okay? So it occurs at the top of uptrends. So you'll have your uptrend, okay? Then you'll have a hanging man, and then they'll start to come down, okay? And this can be confirmed, as I said before, this can be confirmed with your trend lines that you're going to draw, all right? So draw those trend lines get those trend lines in order, and be on the lookout for this. The Doji indicates buyers and sellers are being indecisive. Okay, never trade off a Doji. Neither selling nor buying is going on during that time frame. Okay, this can happen during very low volatility market times. In the afternoons, the markets are sluggish. They slow right down after lunch. You probably see a lot of Dojis. I don't think you'll see a lot of Dojis in the morning. The mornings are pretty volatile. I usually trade the mornings. I'm my sharpest in the morning. The markets have nice volatility. There's a lot of stuff going on. As long as there's no news, high impact news going on, it's a good time to trade. So I'll go over some of those pointers at the end anyways. So never trade off a Doji. You can't really predict which way the market will go. And it's just this, it looks like a cross. It just there's no buying or no selling going on here. So I know I just mentioned something about bearish. Bearish, you've probably heard people talk about the bull market or the bear market. In the 80s and early 90s, the bull market was really good. A lot of people made a lot of money on it. Bullish and bearish is just simply the market's going up or down. Bullish candlestick patterns indicate that the market is in an uptrend, more buyers than sellers. This is usually a long term. And bearish candlestick patterns indicate the market is in a downtrend, which indicates more sellers than buyers. Now, people say, well, how am I going to remember that? How am I going to remember that? Well, back when I was in school, I always used to try to make associations with things. And so I'd rather see a bull than a bear, because I think I could run away from a bull, but I don't think I could run away from a bear. So if a bear got a hold of me, I'm pretty sure there'd be some blood. And blood is red, and that's why I say that the bearish market is red. It's an indication of a downtrend. A bull I could run away from, and I don't think he'd do too much harm to me. So that's how I remember that thing. So just remember bearish, blood, red, downtrend. Bullish, green, uptrend. That means you're running fast. So again, that's the way that I remember this. Excuse me. So in summary, always be certain there is an existing trend in place before looking for both strong reversals and long wick reversals. Okay. Always be certain there's an existing trend, okay? If we're looking for a reversal to take place, there must be something to reverse, okay? So you need to remember that. Similar to the strong reversal candles, we are once again looking for some evidence that whoever is in control of the market, be it buyers in an uptrend or sellers in a downtrend, are beginning to lose their power. And that's what these different types of candlesticks and wicks indicate, is that the buyers or the sellers are taking control, and the other, whether it be the buyers or the sellers, are losing their control. So never trade solely on candlestick patterns, okay? Always confirm this with other indicators, okay? You can use trend lines. You can use some of the other indicators that I will be teaching you in the next modules, okay? So this is just an example of another thing that when I say that your eye will become trained, when you have all of this stuff set up and you understand all of this stuff little by little, your eye will become trained so that when you look at your charts, you can see specific patterns forming or specific trends forming, okay? So I hope this helped you. I'm going to dive into Module 3 next, which is going to be some, I'm going to start in with some different trading strategies, and I will see you on the next module.